Hey everyone, cybersecurity firm Zscaler reported quarterly financial results that are sending the stock higher by more than 10% as of this recording. I'll review the numbers that are sending Zscaler stock higher. I'll also update my buy recommendation for Zscaler stock. Coming into the quarter, I did have Zscaler stock rated as a buy. It was a borderline buy, but I did have it rated as a buy, and I'll update that recommendation in this video. I'll let you know if I'm keeping it as a buy or if I'm telling investors it's time to take profits or even upgrading Zscaler to a top stock to buy. So let's take a look at the numbers first.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Zscaler reporting $553 million in revenue, which was an increase of 32% year over year. Over the recently reported revenue numbers between the cybersecurity firms that I follow, the bigger players, Palo Alto Networks and Fortinet, their recently quarterly revenue numbers were not growing as fast as Zscaler. Zscaler CEO saying, to meet this demand, we are accelerating innovation, expanding our platform and building a strong go-to-market team to scale our business to $5 billion in annual recurring revenue. So if we annualize this number, we get to roughly $2.2 billion in annual revenue for Zscaler. The company feels confident it can more than double this to $5 billion in annual recurring revenue over the long term. Now, over the long term, I am optimistic about the cybersecurity industry. Enterprises and institutions are having to spend more and more money on this category. It's becoming more of a must-have rather than a nice-to-have. And given the more and more time people are spending online and on our devices, cybersecurity is becoming ever more important. Still, one of the reasons I was cautious about the cybersecurity industry in recent months was because of what I was seeing out of Palo Alto Networks. The company had reported slowing billings growth, slowing revenue growth, and implemented a strategy of taking market share. And I was concerned how that would reverberate across the industry. So far, I haven't seen any big negative signs from that increasing competitive position from Palo Alto Networks. The second concern I had was the evidence from Palo Alto Networks and Fortinet was showing maybe some exhaustion from enterprises on spending in cybersecurity. But as I evaluate more of these companies in cybersecurity, it seems to be that the smaller companies are taking market share rather than enterprises decreasing cybersecurity budgets. I was concerned that the increase in budgets towards artificial intelligence was taking budgets away from cybersecurity, thereby slowing industry growth. Those concerns, from my point of view, seem to have been overstated earlier in the year, and those concerns now don't seem as high as I thought they may have been earlier in the year and late in 2023 when I first started noticing these decelerating revenue growth rates from some of the larger cybersecurity firms. So the cybersecurity industry is almost out of the penalty box in my point of view. I'm waiting to see CrowdStrike, one of the other major players in the cybersecurity industry, and I'm waiting to evaluate them a little bit more. And then I'll feel more comfortable in taking the cybersecurity industry overall out of my penalty box. Well, I shouldn't say penalty box. Cybersecurity was one of my top industries, one of my favorite industries to invest in for several years now. And I've just been slightly more cautious of that view. And the reason was because I highlighted the increasing competition. And it's because I've just tamped it down a little bit. I've been very bullish on the cybersecurity industry, and I just brought it down instead of being very bullish to just bullish. So moving on, the company's loss from operations was $3 million or 1% of revenue compared to a loss of $55.7 million or 13% of revenue in the same quarter last year. So excellent improvement in their margin. As I often say, I don't mind when companies are losing money on the bottom line if they're demonstrating progress towards profitability, which is precisely what Zscaler has been doing. And it's been partly why I had the stock rated as a borderline buy, and I last updated that recommendation on April 15th, telling investors that it's a relatively good risk versus reward at its current valuation. The company is also doing a great job increasing its cash flow from operations, which jumped to 173 million or 31% of revenue compared to 108 million or 26% of revenue in the same quarter last year. Tech companies like Zscaler use a significant sum of stock-based compensation, which makes their cash flows look better than their profits, and that's precisely what's happening with Zscaler. Deferred revenue increased by 34% up to 1.577 billion. And I like when deferred revenue or billings or remaining performance obligations, or however the company accounts for contracts that they have signed but they have yet to perform. So these deferred revenues will eventually turn into revenue. I like to see these rates of growth above revenue growth. And we did see that with Zscaler. You see 34% increase in deferred revenue and 32% increase in revenue. That supports continued revenue at least at 32%, maybe even higher than that if it continues to persistently increase its deferred revenue at rates above increases in quarterly revenue. Now, longer term, the company has done an excellent job, like I mentioned, increasing its cash flow from operations to sales up to 34.15% in the trailing 12-month period. In the most recent quarter specifically, it was 31% of revenue. In the trailing 12-month period, it's 34% of revenue. So a slight decrease from the trailing 12-month rate, but that's okay. It's still a strong rate and it's still showing an upward trend line here. Similar story with its operating profit margin over a trailing 12-month period. The company made improvements in 2022, and that reversed those losses on the bottom line. It's now making more progress towards profitability, now at negative 9.72% in the trailing 12-month period, up from the worst position it was at negative 32% in mid-2022. The stock is now trading at a forward price to earnings ratio of 48, which is not cheap. It's relatively expensive, but you're getting a lot of excellent value from Zscaler. And so it has earned a premium valuation. After all, the company is increasing revenue by 32%. It's improving its loss from operations, making progress towards profitability. Its cash flow from operations are increasing significantly year over year. Deferred revenue is rising, and the company has indicated its goal of reaching 5 billion in annual recurring revenue and is hiring more people to prepare for continued increases in revenue. So you're getting a lot of positives from Zscaler, and it's earned that premium valuation. So to reiterate, I would say I'm keeping Zscaler stock at a borderline buy. And the only reason it's not getting a full upgrade to a buy is because of the relatively expensive valuation. The stock price jumped another 10% following these earnings results. So it adjusted for another solid quarter. The company's stock price moved higher. I wouldn't be surprised though if over the next few months I fully upgrade Zscaler stock to a buy, as well as seeing upgrades for the rest of my cybersecurity stocks that I follow, including Fortinet and Palo Alto Networks and CrowdStrike. I like what I've seen from the cybersecurity industry in the last couple of months. No big retaliations to the move from Palo Alto Networks in trying to take market share. And as long as this relatively calm competitive environment sustains, I'm going to be bullish again on the cybersecurity industry. Not just yet though, not just yet, almost. And I'll keep you posted on that. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.